Thank you, and good day to everyone, wherever you are in the world today. Certainly is an interesting world in which we find ourselves. The numbers that we saw about cases and deaths and recoveries is extremely important. Put them in perspective in your particular country, please. Most of what's going on today is out of perspective. It's a very small percent of the population which will actually get ill from this virus. Over 80% of those that are infected will not feel much in the way of effects at all, maybe a headache, maybe some fatigue. I'm not an MD, but that's what I have learned. And with that 80%, a large amount will be asymptomatic. So first thing to do is just don't overreact. I've noticed a lot of people have this great fear that this virus is a killer. It's a very small percentage. The recovery rate is very high, very strong. And as a percent of the population, in most countries, it's actually very, very small, infinitesimal. So again, it just helps to put it in perspective. Look at the numbers that way. There's a lot of modeling going on, but it's straight line modeling. It's linear. If 2.5 people, give it to 2.5 people in 30 days, it'll reach 1 million people, that sort of thing. That's bad math. That's not the approach that you should take. The numbers so far don't support it. But having said that, understand there will be a spike in numbers in the U.S. and in other countries because of the amount of testing that will be going on. So it will feel like things are getting a lot worse. I urge you to not overreact, but rather understand the source of the spike is from the sheer amount of testing. You're not likely to find that you're not going to find that this is an end of the world scenario. This is something that is going to ruin your life, ruin your business. One of my key management objectives for folks is to continue to run your business for the long term, not for the next quarter. This is different than a lot of people's thinking. You hear a lot about how this is going to last 18 months, 12 months. That's not so. You're not going to find, using historical precedent, which you have to borrow from because we haven't had 2 black swans before. We have the oil crisis and coronavirus going on at the same time. So that's unusual in history, but as we borrow from other events that are very similar in the past, or similar enough, we find that this is likely to be very short-lived, that we will find that the tail end of the virus can extend for quite a while. We won't see a vaccine for well over a year. We're not going to see it all go away, but normality will return. So in your steel business, if you're selling, for instance, in the automobile industry in the U.S., all of a sudden, a lot of plants will be shuttered for a month. It's only for a month. It's not going to be shuttered for 6 months. You're going to have to decide what to do with your employees. You're going to have to decide how you want to handle the pressure that is upon you. My advice to you along those lines is to, whether you're in construction, let's use construction. If you're in construction, you're in India, now that 1.4 billion people have to stay in place, stay in their homes, construction is going to stop. So the question becomes for you, how long will it last? If you're listening to the pundits telling you this is going to last a long, long, long time, you're going to make one set of decisions about your cash, about your employees, about your needs. If you look at the cases that have happened in the past, you're going to say, all right, this is going to last a month. If it lasts a month, that's a different picture on your cash. So work the cash out in India, Malaysia, work it out in Italy, and in the UK, the United States, Canada, and you're going to come up with your own solution to your cash needs. If you're in the United States, there's a tremendous stimulus package that was just passed for $2 trillion. That's going to help a lot. It'll help a lot of businesses get through this. For others, you're looking at layoffs if you possibly can. My advice to you there is to stay in touch with your employees because you're going to need them back in short order. So think of these layoffs as a cash device, not as a long-term device. And I want to tell you a story about a friend of mine who was a manufacturer as we were heading into the Great Recession here in the United States. He had to lay off his employees, almost all his workforce. And as he did so, he told his employees, said, keep your things in your lockers. I will be bringing you back as soon as I possibly can. I promise you I will be bringing you back as soon as I possibly can. I will do my best to take care of you this way. And he actually kept their health insurance going during that time. Most of the employees came back. The ones that did not chose not to because they found other employment. But that kind of upfront attitude, that kind of constant communication that you should be having with your employees, no matter which country you're in, will keep them from assuming the worst case scenario. Human beings always assume the worst case scenario. So in the absence of solid information from you, they'll just think the world's falling apart, it's a zombie apocalypse, this is just it, there's no end to this, and they will react accordingly. Your job, as I see it, would be to keep them calm, keep them in place, and keep them ready to come back to work so that as soon as things turn, it'll turn for the better in a way that you can take maximum advantage of. When will that be? Well, for most of the world, not for all the world, you're going to see that things begin to get better, we believe, in the third quarter of this year. And then in the fourth quarter, get a little better. And 2021 is going to be a good year. As far as the recent reports, and I've been reading about them here, I assume they're in other countries as well, don't believe the China model, and we're getting a lot of that here in the United States, believe the China model, because if you look at South Korea and you look at Taiwan, you can see very similar events where you find that there is a way to contain. This is not nearly as dramatic as we've been told by the modeling that's gone on in some countries. And if you look at South Korea and Taiwan and even at China, you don't have to believe the official numbers. When it comes to China, for instance, the government numbers may or may not be believable, depending on your point of view, but we don't use those. We have contacts with people on the ground. We have contacts with people who work and live there, and they tell this story that is very similar to what we have been told in the press before the most recent Don't Believe the Press out of China. 70% utilization in manufacturing is in place now. Ships are making their way across the oceans to bring goods to the rest of the world, and they expect within 4 weeks at this point in time to be up to 90% capacity utilization. That's a tremendous model for the future. Then if you factor in South Korea and Taiwan, you say to yourself, all right, this is not going to be as bad as we're told. This is not going to be as bad as we fear. Prepare your businesses to be busier again later this year. Make sure you batten down the hatches for the next 60 days or so, maybe even as short as 30, but then be ready for what lies ahead of you. That's my best advice for you. The world's not ending. The economy will pick up later this year. Your economy will pick up later this year, and we will all get through this. Thank you.
In the Netherlands, in Rotterdam, and I very regularly deal with clients active in the steel market. On your request, I have looked at a number of issues which play within the steel market, and I would like to touch upon 4 points. Very briefly, what's going on the steel market in the Netherlands. Secondly, what the impact is of the virus on pending contracts. I will have a brief look at the possible impact on letters of credit. Then I have a small word on credit insurance. And if time allows, I can talk about a recent webinar where a lot of Dutch exporters aired their views on what's going on. Okay, well, the first point, the steel market in the Netherlands. Well, I haven't been able to speak to any clients so far, but I do know that Tata Steel, for instance, is functioning in a normal way. There's no lockdown or whatsoever here in the Netherlands. Companies, mills can function as usual. Although the production rate at Tata has decreased considerably. That is not only due to the outbreak of the coronavirus, but also due to a strike they had recently. I'm not going to touch upon that, but all over what we see in the Netherlands, in the steel branch, is that everybody expects turbulent times with a lot of insecurity. Well, that will not surprise anybody, nor will surprise anybody that the expectation will be here in the Netherlands that steel prices will go up considerably on short term. As to the steel trade, there are at this moment no limitations whatsoever for ships or trucks to move around in the Netherlands to carry around steel products. Ships can call upon Dutch ports, although ships have to submit a maritime declaration of health. And the EU has issued guidelines regarding possible conditions for restrictions on the movement of goods in general. At this moment, movement of trucks, for instance, is regarded as essential to ensure economic activity in Europe. So there are no lockdowns in that regard. Okay, that about the steel market in the Netherlands in just a few words. Now, more importantly, from a legal perspective, what is the possible impact on pending commercial contracts? And everybody asks themselves, does this lead to a legitimate, justified call on force majeure? Can either party walk away from contracts based on force majeure? Well, force majeure is a very complicated legal notion. It depends on the applicable law. Common law countries have a completely different idea of force majeure means than in civil law countries. Looking at it from a civil law perspective, well, what is force majeure? Well, these are circumstances beyond a party's control, making it impossible to meet obligations. Well, that leads to a number of legal issues. The party invoking force majeure must notify the force majeure circumstance. There's a possibility of suspension of obligations or a termination of the contract and a duty to mitigate losses. However, under Dutch law, there is a very high threshold to be able to invoke force majeure. An economical crisis is in principle in Dutch case law not regarded as a force majeure event. And especially in the steel market, it is widespread known under judges that the steel market is a very volatile market, and heavy increases or decreases in prices in the steel market are, for instance, also not regarded as force majeure. So the question is more, I think, other than, well, is this a force majeure circumstance? This can now arise. I think it's more a question of who's running the risk here of the whole new situation. And I think it depends on which side you're on, whether you're on the side of the seller or the buyer. The seller is most probably able to invoke force majeure if, for instance, his supplier cannot deliver. It is different if the buyer says, well, due to this whole crisis, I'm not able to pay. But that is something completely different. That is more a financial circumstance on buyer's side. It doesn't prevent him from buying or from paying. So I think, especially from a buyer's perspective, he is in trouble. So that is in brief my analysis of the situation in terms of impact on commercial contracts. Well, now about letters of credit. Letters of credit. The UCP 600. Everybody working with letters of credit knows that the UCP 600 is the leading set of rules which concerning letters of credit, and Article 36, one of the last articles in the UCP 600, say, and I quote, "A bank assumes no liability for the consequences arising out of the interruption of its business by acts of God, riots, civil commotion, wars, acts of terrorism, strikes, or lockouts, or any other cause beyond its control." In other words, the bank has to close in order to be able to invoke force majeure. Pandemics are not mentioned there. And as long as the bank is not forced to close its counters, I don't see any reason why a bank should not honor a letter of credit. I've heard that Philippine banks are under lockdown due to the coronavirus. So that is a different situation. So in principle, I think letters of credit shall have to be honored by banks regardless of the crisis that is going on. Now, credit insurance. Well, the only thing I can say about that is that the largest credit insurer in the Netherlands, Atradius, recently amended its policy as a result of the crisis we are in. And the policy terms are giving exporters more leeway to agree on longer payment terms with its customers. And this leeway is twofold. One, there's the duty to notify overdue invoices and the duty to pass invoices on for collection has been extended with 30 days. Secondly, the insurer is allowed to agree with his customer longer payment terms with a maximum of 60 days. And this is all in order to help the exporters. And this new policy of Atradius concerns claims debts with an expiry date of 1 September 2020. So that is what I have to say as regards, well, legal aspects around this whole crisis. I can add a few words on, maybe I should do it right now, it's not much, it takes me 1 minute. There has been a webinar organized by Atradius earlier this afternoon on export. And there are voices within the exporting community within in the Netherlands to try to reroute its supply chain so that we are no longer too much depending on supplies from China. And Dutch companies are now very much looking at Germany as some sort of a dedicated supplier. So that is one. Secondly, it seems that there's a lot of solidarity between Dutch companies to help each other. So there are no, as far as I know, big legal fights going on between companies here as a result of the crisis we are in. And there's of course also a large support from the Dutch government. So they are holding out for the time being. Nobody is really panicking, and everybody, of course, hopes to get things to normalcy as soon as possible.
There has already been existing volatility in the steel industry since the beginning of this year, and there's been. I'm going to talk about the current conditions that we face as a company. Back in December 2019, our management team agreed that due to the volatility of the LME prices, political tensions in different countries, and a very strong U.S. economy, we would expect some downside in sales and weight of sales in 2020. In fact, I've traveled to India and other neighboring countries the last 2 weeks of December to promote sales and marketing because we wanted to give it as much push as we can on the sales end. Going forward into January and February of 2020, I think we all have felt pricing pressure, margins reducing, and inventory stocks on a rise. Our thoughts of a softer market were coming true as we moved forward with fears of a market drop. Going into March, the effects of the COVID-19 on the metals market has made a lasting negative effect. In March, we realized the following. Stocks of LME inventories of nickel and other metals started rising. This is in direct correlation to China's reduced usage. This will direct impact pricing of stainless steel coils and sheets to go down. Another trend we have seen is steel scrap prices are on the downward trend and expected to go down $30 to $70 a ton next month. This we believe is also linked to decreased usage of scrap in various shutdowns throughout the world. Demand of stainless steel and steel has reduced 30 to 50% for us this month. Not only sales are down, but many customers have asked us to consider a delayed release or late shipment of their order, or potentially cancel their order or lessen the quantity. Our scrap sales, the overall mood in Asia and Southeast Asia has been bleak, and people are worried more about pricing and demand as there are many, many shutdowns in their countries. We believe that there will be more pressure on stainless and steel scrap prices this week and next week, as India has also gone on a 3-week shutdown. On the scrap side of our business, we have had many scrap yards delaying our shipments because of lack of employees working. At the same time, containers for exports have been very difficult to find, pushing their pricing up by 20 to 40% in most cases. We think that the container issue is linked to a lack of containers coming back from Asia back to America, directly linked to manufacturing slowdowns in those countries. In terms of trade wars and tariffs, besides all these factors of lower demand for metals worldwide, lower pricing of raw material, we still face trade tensions all over the world. On our imports, we are still paying the Section 232 25% duty on all our imports. The US government has been very stern and has not made any changes. Also, anti-dumping and Section 232 duties on China steel and other products still exist, with no changes ahead to be seen. I would like to also mention that in the US, 3 big auto manufacturers have had shutdowns as of right now for the next 2 weeks, which has had a very negative short-term impact on our business, on many other companies, including steel mills, because no one is accepting any more shipments for the next couple of weeks. Next topic I'm going to talk about is trade finance and how it relates to our company. Trade finance in North America for the steel industry is in a panic and a confused state. With the virus's impact, it is expected that banks will lessen credit lines and trade finance. In our company's case, we are grateful that our credit line for imports and trade finance for exports is still active without any changes. When steel prices drop, in general, demand is weaker. Banks are going to be more cautious. We can note this from the 2008 financial crisis. Currently, we are seeing a tightening of funds as customers are paying us late. And same goes for the export sales that we do overseas. Payments are coming in very late. We see this in connection with lesser demand and the inability of customers to ship to their customers and collect money from them. I think this will lead to many steel-related businesses to pay their lenders and banks late and potentially see a reduction of credit line because less of the credit line is going to be used, and also the pricing of steel has come down significantly. Basically, we should just see more cautious lending by the bankers out there. Supposedly, the U.S. government is pushed through a $1 trillion stimulus package to help all businesses affected by the virus. But it's too early to tell if this will help the steel industry with borrowing or tax incentives. This can potentially mean the bank should be easy to lend money and get better trade financing for the steel industry. Another topic I wanted to touch base on is credit insurance. All our customers right now have credit insurance we have on them. This year, unrelated to the virus, Euler, who's our insurance company, has lowered many credit lines of our customers. So far, we have not seen any major reductions related to the virus slowdown, but we are definitely expecting it to happen very soon. In summary, the virus has had a major impact on the steel industry, and I think it will take at least 6 months to a year for things to come back to normal. And the only way we can get there is with the help of the government and financial institutions. I'm in New Jersey, and the situation is pretty rough. Most businesses are closed. Fortunately, the steel industry is considered an essential business, and many companies are open, but the demand definitely has weakened because of the fact that many other businesses are shut down. At this point, the cases are on a rise, and we expect this shutdown to at least go on for another week or two. The situation is pretty scary, so I expect at least 3 weeks, 3 to 4 weeks till the full shutdown is going on.
I see, having followed the news almost every minute over the last few weeks, that there are many countries adopting a different strategy and coping with it in a different manner. So I can only talk about what's going on in the Netherlands and what effect does it have on employer contracts and so on and so forth. So it is pointless and also very difficult for me to say anything outside of what is happening in the Netherlands in that respect. Well, I think we have to distinguish two things. First of all, there are also, in the Netherlands then, there are all sorts of measures taken by the government, and there are many shops like restaurants and bars, they are closed. They are not allowed to open. Supermarkets, of course, are open for food and things like that. People in the Netherlands are ordered by the government to keep 1.5 meters away from each other. Whether that can be enforced, that is another point. But it seems that most people here in the Netherlands follow up that instruction by the government. It hasn't gone so far that you have to line up before you enter a shop. And I don't think that, and now jumping to the question whether the retailer has any responsibility for the health of a visitor in a shop. Well, that is a very interesting question, but I don't think so. I mean, it is the choice and the risk of a customer entering a shop, whether he will meet people or see people, etc. It is not. I don't think it is up to a retailer or a supermarket, whatever shop we are talking about, to protect the health of customers. I don't think it goes that far, that responsibility of retailers.
Our last question is to Sam. So in terms of exports, since everything is locked down and or most industries are locked down in the US, how is this affecting your exports?
The exports are obviously way down. We have existing orders that we're shipping out that people are, questioning the price because all the scrap prices have come down. In terms of demand, there is plenty of scrap available in the US that we can export out. So the effect of exports is that the prices that came down, the demand has weakened. At the same time, the container prices for exporting it has gone up. So we are in a little difficult situation.
What is your outlook for the next few weeks? What are we expecting to see?
Well, I have listened to an update given by experts to the Dutch Parliament this morning, and the bottom line of expert investigations is that it seems that in the Netherlands that there's a begin of flattening the curve. That means that they think there are already results from the measures taken so far. But the measures taken here in the Netherlands are, well, a little bit different from other countries. But that is, as such, good news. And I hope that the situation continues as it is so far. That means that people are asked to stay at home. There's no everybody can can leave the house if he wants to. However, they are not allowed to join up with more than 3 people at the same time, and they have to take 1.5 meters distance between each other. So that means that and people who need to go to work, they can go to work, although most people are working from home as far as that is possible. If there's a family with one member having the virus or having some other medical complaints, that family is supposed to stay at home in its entirety. Schools have been closed. Exams will not be taken, but schools are closed. But for the rest, it seems that you can go around pretty much in freedom, which is for Dutch people very important. And it seems that everything is, well, basically under control, and that also concerns hospitals and people lying in intensive care. There's a huge demand, of course, and hospitals and doctors are really struggling. They're working 24/7. It's incredible what these people have to do, but they hang in there. And the message of this morning, I repeat, that it seems that we have started the flattening the curve, well, is very encouraging for us.
Thank you so much, Peter. And Sam, your outlook for the next few weeks?
My outlook is kind of bleak. We see that in the US, there is not enough testing done, so we don't really have an accurate picture of how many people actually have the coronavirus. I think that it's going to take at least 4 to 5 weeks before any kind of flattening really happens. I don't know about other countries, but in America, the testing centers don't have enough tests. They have lines of 500-600 people waiting online, and they just can test a few hundred. So it's really, we don't know really what the actual situation is. And as you can see by the charts out there, that New York has over 20,000 cases. Other cities like in Los Angeles and other major cities, the count is relatively less. I'm guessing those cities are going to have way more cases also. I think that we might end up getting more cases than what China has reported at the end of the day. So I'm giving it at least 4 to 6 weeks of this going on. After that, I'm guessing the country will open up, the retail shops will open up, and there'll be some flow of metal and other industries opening up that are closed at this point. And hopefully by then, the auto industry opens up. The three main companies in the U.S., their shutdown has tremendously affected a lot of companies, including ours.